Hi guys, welcome back. Good morning on this kind of almost slightly sunny Thursday morning. It certainly feels a little bit warmer and nicer than it did yesterday. We've got a fantastic lineup for you today. So obviously right now we're starting with a Q&A accountancy chat with Natalie and Alex from Theataccounts. That will be running until 11:30. We've got an introduction to tax with Simon Adkins at 12. And Katie Richardson's back singing rock with us at 1:30, and then we have an audition technique class with Grace Taylor at 3:15. So without any further ado, I'm going to bring in Alex Dyer from Theataccounts. Morning, Alex. How are you doing?
Good morning, Rosie. Very well, thank you. Very well. Sorry for the delay. It's my fault. We're 2 minutes late.
No worries, no worries. We've all been handling different technological issues throughout the last few months, so they are just ongoing, unfortunately, for all of us. So tell us a little bit about you guys, about you and the background to the business.
Yeah, okay, brilliant. So my name's Alex Dyer. I own Theataccounts, which is an accountancy practice for the entertainment world. That's it. We do accounts. We've got a great little niche for the entertainment world. It's a crazy time at the moment for everybody else as well. So, you know, we're really proud to be part of this. Thank you very much for inviting us, Rosie. It's very, very nice. The only slight difficulty is normally for us, we do it in a room with 20, 30, 40 people. So you can get a feeling, there's a vibe. You've got the atmosphere in the room, so it's quite difficult to make tax exciting. And you know, I've watched some of the other ones, and you know, yoga's really exciting to watch, isn't it? But you know, a man talking about tax doesn't really get very exciting. So we'll certainly do our best, and I think you know we're here for a long time to come for Rosie to support you guys. Anything people want to talk about, we can pick up, you know, on the next session. So we're happy to help as much as we can.
Thank you so much for being here. I think a lot of people are going to find this very beneficial. So this week, Natalie's going to join us a little bit later on. So Alex is just going to be talking about specifically tax and financials around coronavirus and what support is on offer at the moment, and talking a little bit about that. So I'm going to come out of the stream. We are going to have a Q&A. So if you have questions, by all means, type them in, but know that Alex is going to talk for a little bit first, and then we'll come to that in the second part of the Q&A. So if you have any questions at all, they can, obviously today specifically is around the COVID-19 crisis, but if you have other questions, feel free to drop them in and we'll chat about them a little bit later on. I'm going to add Alex's screen in there, and I'm going to come out, so I'll see you in a little bit.
Thank you, Rosie.
All right, thanks, Alex.
See you later. Thank you. Right, good morning, guys. So I can't see anyone, which is very unusual. I can just see my slides and nobody else. I'm almost talking to a laptop screen with nobody to look at. So I hope you're all very well. Hopefully this will help a lot of you out. Very difficult times for everybody for a million different reasons. So we've prepared some slides to try and make it as informative as possible. We've put a few common questions that we've been asked at the moment in there, so hopefully that will answer some of the questions as we go through. And I think at the end, you know, fire away your questions now. You can start them coming through. I can't see them at the moment because I can just see my screen. And then we'll definitely come back to them. I think in future weeks, once we've covered the COVID-19 today, we can look at any changes for it, or we can go on to talking about normal self-employment. We can talk about being VAT registered, national insurance, anything else that will help. So moving through, I'm Alex. I run Theataccounts, a niche accountancy business for the entertainment world, really. We've got thousands of clients that cover all different angles, and we'll run through that shortly. So moving on, I've put the PowerPoint this way. It probably doesn't look very good, but at least I can still see a few bits coming through. So this says a tiny bit about us. Accountancy practice exclusively for clients in the entertainment industry. We're not just once a year, we try and be different, hence why today we want to give you a bit of support. So there we go. I've had to put a little disclaimer on there, so everything as at today is accurate. Everything changes so much at the moment, so you know, an announcement will go out on the 20th of March and we get bombarded with questions, rightly so, but unfortunately the actual detail doesn't follow for a couple of weeks after. So at the moment, this is accurate as at now. But if anybody wants any help afterwards, you can, get in touch with us. We'll continue the free help as much as we can to support people. So just give us a shout, and we've got contact details at the end. Okay, so there's a variety of support available. We've tried to just highlight a few of the main areas, as you can see. The obvious ones people know about, which is a self-employed income support scheme. We'll touch on that shortly. The job retention scheme, so the coronavirus job retention scheme, we'll touch on that shortly. And all of the other ancillary ones around those, really, they're available. They're probably not as apparent at the moment for everybody, but they're certainly things that we need to touch on, and no doubt people will have questions on those. Okay, so if I then, this is a bit of a crazy flowchart that we produced. I think it was on the 1st of April. So all of the changes were coming out. We're getting bombarded with questions. Nobody really had answers. So we tried to create this, looks like a crazy flowchart, but it actually makes sense. Things may have changed on it at the moment, but we put this on social media, again, trying to be different, trying to help people out. There's tons of stuff on there. If anyone wants it, I can pin it to our Twitter page later on today. I think, to be honest, everybody probably knows generally what they're entitled to at the moment. So this has, served its purpose. We did it on the 1st of April, probably about 11 o'clock at night, running like mad trying to produce documents like this. So it was very helpful. I think it's had something like 200,000 impressions on Twitter. So I know it's helped a lot of people out. And we'll touch on a couple of those points now. So moving on, we have the most common one at the moment, which everybody probably knows about, the self-employed income support scheme. I'm not going to go through all the facts and figures because no doubt people have read it from cover to cover. But at the moment, the first grant was announced. That covers self-employed people for the months of March, April and May 2020. So the government are paying 80% of taxable profits up to a cap of £2,500 a month. There's various elements of criteria that needs to be met. So you need to have filed a tax return for 18-19 by the 23rd of April. They extended that window for people that were late. 50% of your total income needs to come from self-employment, and we'll touch on a couple of issues shortly, and no doubt people will have questions on those. Your average trading profits must be less than 50,000. You must plan to continue trading in business, and your income must have been affected by COVID-19. That's quite a subjective point, but if you're ticking the box that your income has been affected by COVID-19, then the grant is given. Good news for self-employed people is a second grant was announced on the 29th of May. That's going to cover the following months for June, July and August. And they have reduced the grant, so that is now going to be 70% of your taxable profits, up to £2,190 per month. So for the first grant, you can just do it online. Accountants can't do it for you. You go online. You would have had an email from HMRC to say if you're eligible. I know a lot of people were struggling to get in, struggling to see if they're eligible. But I think for a lot of people, that are eligible, I'm aware that it's worked quite well. There have been a lot of people that are not eligible. That's the biggest thing at the moment that's an issue. Again, I could talk about that all day. There's Twitter groups on there, Forgotten Limited, there's something else. So a lot of people have benefited by the grants. Some people have benefited more than they normally would, but also a lot of people have been missed out and fell through the cracks. So second grant, you can't apply for that until August. As far as we're aware at the moment, August is the date that they've suggested. Will they open it early? Maybe, but we don't know. So you've got to stick to the August date. Apart from that, you can't do anything until that date, apart from make sure that you've got your first application in for the first grant if you haven't already done so. If anyone has any questions on eligibility at the end, we're happy to run through those questions, no problem at all. Okay, so if I move on to some of the common questions that may answer some of those. So can I claim for the grant if I currently have other income? So those of you on social media, there's a huge surge. Obviously, people have got no money coming in. The shows have closed, and their work has stopped. They need to get some income. So people have got a job in Tesco's or wherever. The quick answer is yes. If you've been affected by COVID-19 and you're not being paid as self-employed, yes, you can go and get a job in Tesco's. And as far as we're aware, that does not affect that grant. Okay, so yes, tick, brilliant, great. Can I claim the grant for my maternity leave? Yeah, we've had so many nightmare questions and we've only put 6 on here. There's about 1 million really, but I'd probably send you all to sleep talking about these. So the maternity pay one's a difficult one because HMRC will say that you are eligible, I would imagine. However, they will not know that you're on maternity pay, so they're just going to assume you're eligible. It comes down to, as I think Martin Lewis, people have probably listened to, whether you should tick the box that you've been affected or not. Because if you were on maternity for this current period anyway, then your income probably wouldn't have changed anyway. So certain people won't tick the box because they know their income's not affected. Other people will be ticking the box. They will still be eligible for the grant. They will still receive the grant and they will be beneficial. So that's down to ticking the box. Have I been affected? Okay. What can I do if I don't agree with the value of the grant? So check it. It is quite simple to check. We've checked quite a few for our clients. Generally, they're accurate because HMRC have the figures. They just base it on your tax returns that have been submitted. They work out the average, whether it's over 1, 2 or 3 years, and it's just automatic from the computer. That is it. There have been issues where losses have been included and our clients haven't been aware of it. So you may have made a loss in year 1 or year 2, and then year 3 had a really good year. Then unfortunately, those losses affect the grant that you can claim. So I think one of the big things over the last how many years, people have obviously had lower income and paid lower tax potentially, or they've had a loss. They're all brilliant from a tax point of view. They're amazing. They're great because you pay less tax or you get a refund. When it comes to 2 things, so outside of COVID-19, the other biggest thing is people trying to get a mortgage. Obviously, the lower the income on your tax returns, then the lower the mortgage that you get. Also, the lower the grant that's going to be paid out. So check the calculations yourself. If you're a client of ours, we'll check it for nothing, no cost, no problem. If you guys have got your own accountant, they will check it for you. Or if you wanted us to do a quick check, we can do, but we can't obviously check 1,000 people's because that would take quite a long time. But give us a shout. We'll happily work through any that you need help with. Will HMRC consider using my tax return for 2020? That's one of the biggest questions we've had. And at the beginning, when the announcement was made, again, nobody knew. So people were getting their 2020 tax return in as soon as possible, just in case. But at the moment, they're only using the prior 3 tax returns because they're the ones that have been submitted. Even though they did give a window for the 18-19, which was quite interesting, why they wouldn't use 2020. But I think it's just down to the fact from a fraud point of view, they've suggested, and we don't make the rules, HMRC have suggested that there could be a potential risk of fraud. People will put in huge tax returns to ensure they qualify for that. So will it change? I doubt it very much. So I would suggest no, they're not going to use it. But again, we also wouldn't have predicted the systems that they have used, and we wouldn't have predicted a pandemic. So it's always a good time to get your tax return in anyway. I would say that, obviously. If you are due a refund because you've had PAYE, then get your tax return in. You'll get it back earlier. If this is quite a good platform, actually, to go on my one-man mission of saying the earlier you do your tax return, the better. Obviously, you still won't pay that tax until January 2021. If you do a refund, you get it back earlier. I'd just get the tax return in. They might change the rules, but I doubt it. But it's good to get your tax return in anyway. I only worked for 6 months of the year. Is it calculated pro rata? The quick answer is no, and this is where we come on to some of the nightmare questions probably later of people that have been affected. So if you've only worked for 6 months of the year, it's not divided by 6. It's not prorated. It's covered by the 12 months. It's averaged over the 12 months. Unfortunately, that's it. How is my taxable profit calculated? So HMRC have always mentioned trading profit. In accounting speak, trading profit is the figure that's before capital allowances, whereas actually they've based it on your taxable profit. So no doubt you've all heard of an SA 302. Basically, that is your tax calculation, which is your business income less your business expenses minus any capital allowances. So you might have bought a new Mac, you might have bought a new microphone, you might, whatever it may be. It's the taxable profit figure. That's the figure that they base your grant on. There are a few other people that have missed out, and again, I'll touch on it briefly now. I've not put it on the questions because there's millions, so I've got a few jotted notes down that I've put. Again, hopefully this is going okay. This isn't what I normally do. It's even more pressure performing to performers. We're accountants, hopefully not geeky accountants. I've got water, which I'll have a sip of in a minute. It's not gin and tonic, obviously, although every day at the moment feels like the 31st of January. So I've got a few other examples that people are not eligible. So people that have graduated and registered self-employed after the 6th of April 2019, because they've not submitted a 2020 tax return, they're not eligible. Again, we don't make the rules. That's just what they've suggested. So unfortunately, it's not good news for those guys, which no doubt a lot of you have been affected by that. For those of you that don't have self-employment that is greater than 50% of your total income, so we've had a lot of clients that have rental income, we've had a lot of clients that have pension income. If that is greater than 50% of their self-employment, then they're not eligible for that grant, which is a bit of a nightmare. They base it on the 19 tax return first. If you're not eligible based on that tax return, they will look at previous tax returns if you've done them. However, for those of you that have registered after the 6th of April 19, you're not eligible. Again, I'm not here to rub salt in the wounds. I'm just running through those people that have unfortunately not been eligible. Another big one is some people have worked really, really hard for the last 2, 3, 4 years or every single year, and they haven't had great years for 19 or 18 or 17. And we've seen this a lot with clients. Then all of a sudden, the year 2020, yes, they've landed that big role, that role they've been desperate for, they've got it. But because that tax return hasn't been submitted, unfortunately, that doesn't count towards a grant. So it just, yeah, that's where they drew the line, unfortunately. So those people, unfortunately, miss out. I think some people have benefited, which is always going to happen. Some people have benefited more than they would do normally, should I say. So we are aware of certain individuals that might have had quite a low 19 year. They might have only had £1,000 self-employed profits. They might have had a low 18 year with £1,000 profits, but their big role finished in 2017 and they might have had £80,000 profits. So even though they've not been earning much money of late for whatever reason, the average is based on those 3 years. So their average would be the 1,000 at the 1,000 at the 80,000 divided by 3 years. They would get a huge grant that would be greater than what they probably would have earned anyway. But those are the rules, and those are the people that have obviously benefited. So moving on to the coronavirus job retention scheme. So again, this may apply to some of you. Anyone that's a director of their own limited company, yeah, this definitely applies to you. And it's just been a nightmare. That's it, full stop. So the JRS is very, very good for a lot of other businesses. So if you own a restaurant or a pub or somewhere that's been forced to shut down, or if you own a theatre and you employ people, because said restaurant will close because it has to, but they can still pay their staff their wages, and they can claim 80% of that back from the government. So they can choose to pay their employee 80% or 90% or 100%, but they get 80% back from the government. So for normal employees of, I don't know, restaurant, whatever it may be, offices, you know, from an economy point of view, that's worked very well. However, we all know that it doesn't work that way in the entertainment world, which is good most of the time, but when a pandemic comes along, it's not very good at all. So they have extended that recently. It's now been extended to the end of October 2020. They are bringing in flexible working, so people can start returning part-time. Other changes are coming in, but that's more from an employer's point of view from the 1st of August. Employers have to start paying the national insurance and pension. From September, it's that plus they contribute 10% of the wages. And from October, it's then the employer would contribute 20% of the wages. So the employee can still receive either 80% or 100%, whatever the employer decides to pay. So I think generally that's quite good. However, from a director's point of view, anyone that, and I wish I could see everybody's face, but anybody that is a director of their own limited company, I could have written 74 pages about this because it has just been an absolute nightmare. I think first and foremost, dividends don't come into it. That's it. Wherever you read on social media, people, for whatever reason, think that directors of their own limited companies don't pay any tax for some strange reason. Obviously not true. Definitely not true. So I think, unfortunately, it was always going to be a very difficult one for the government to bring out. And they've had to draw a line in the sand. Again, you know, we don't make the rules. But they've not brought dividend income into it yet. There's more petitions than I've ever seen in my life, I think, going around at the moment. There's more Twitter groups that are going around, more Facebook groups. Will they change it? Who knows? Hopefully they do something, but at the moment, no. From a director's point of view, and again, you guys will probably know this, generally accountants for limited companies that have one or two directors, to keep it simple, they don't need to have monthly pay slips. They can just have one pay slip per year. It keeps the cost down. It's easy. You just got one pay slip, which you don't pay personal tax on it, and you pay your national insurance for pension benefit, etc. However, the deadline for that isn't until the 5th of April 2020. So there's no reason to ever submit it on the 1st of March or the 10th of March or the 15th of March. But the deadline is the 5th of April 2020. So generally, from my point of view, we would always do it the last week. You know, we don't have thousands and thousands to do. We've got plenty of time. You always do it in the last week, just in case something has changed. So we'd contact the clients just to check nothing's changed, everything's still okay. They haven't got another job anywhere else. So you just do it in the last week, generally. However, if we could have predicted a pandemic, as any other accountants watching this would be jumping up and down at the same time, we would have submitted it well before the 19th of March. So the announcement for the CJRS was on the 20th of March, and the cutoff for real-time information, which is your payroll submission, was the 19th of March, the day before, basically to prevent any fraudulent claims. I've had lots of information from clients, lots of information from non-clients, lots of information from HR. We've been banging the drum as loud as we can. Only last night, there's more information out there that people are being successful, even if their claim was submitted post 19th of March, so after the 19th of March. They have been successful, but we've genuinely tried. Well, I dread to think how many times we've spoken to HMRC, we've spoken to different people, we've gone to tier 3, and they said, no, the limit is the 19th of March, or the cutoff, sorry, that is it. If it's not in before that date, you're not eligible. But then we see someone has claimed it. So again, we're trying again today. The team in the office are trying, other accountants are trying. I'd love to wave a magic wand. Hopefully we can get somewhere with it. But but I'm sure people will have questions on that shortly, so I will move on from that one now. A couple of common questions. So how much should I receive if I'm on a 0-hour contract or paid a different amount each month? I won't spend too much time on that because you guys have probably all experienced that already. But generally it's averaged out. They would take an average either of, if it's April 2020, they would take an average of the 2019, or it would be averaged out over the prior months. Yeah, so if you furloughed in April 2020, they generally either take the April 19 or an average of the 1920. But again, I could provide loads of calculations for that, so I won't bore anybody too much with that. And we can touch on that if there's any questions at the end. So here's an easy one. What support is available to cover the loss of dividend income? Nothing. We've just touched on that. So there's nothing at the moment for that, and it's highly unlikely, but who knows what goes on. Can you work whilst still on furlough? So if you previously worked for Restaurant Limited and you're on furlough, or whatever theatre, if you were employed and you're on furlough, you have to check your contract first and foremost and speak to your employer, but there is no reason why you can't work for another employer, but just check your contract. Definitely, you can definitely volunteer, but just check your contract, and that's fine to continue and work on that. I'm just going to snoop across and see if we've got a lot of questions. Hopefully my screen doesn't change too much. We've got a few comments coming through. Let's just have a little look, guys. Oh, I've just spotted a very nice one from Abby. Thank you, Abby. Okay, so I'll flick through the questions in a minute, guys. I'll finish off through the slides and then we can go from there. But it's nice to see some comments. It's good. I've actually just seen a picture of somebody. At the moment, I'm talking to a laptop. I've got a window that I'm looking out of. There is a few of us in the office at the moment. Obviously, definitely social distancing. There's tape everywhere. There's more gel than you've imagined, and we're all miles away from each other, which has worked really well. But fortunately, all of the team have really been at home. I think we've had a couple in the office, but just trying to support everybody. But we don't need to.
Hi, Alex. Now. I'm in now, Alex.
Okay. Hi, Natalie. Welcome.
Thank you.
Thank you for joining. Natalie's had loads of IT issues, guys. She's had a complete meltdown. Normally it's me with the IT issues. So, Natalie, we've just finished. We're just about to wrap up.
No, I'm
joking. Not really. So thanks, Nat. So I've just talked through quite a bit of it. We're just looking at the other support areas now. So we've touched on the you've heard it all before, Natalie. Natalie loves doing tax talk, guys.
I'm normally the person to do them, but it's been quite nice actually, Alex, is watching you.
Well, we could probably both talk forever. That's the problem. And I'm thinking, how long is this going to last? Is it going to last for 10 minutes or 3 hours? I could spend 4 hours, but everyone's probably starting to fall asleep. So we'll move on. So we've covered off the common ones, guys. So the self-employed income support scheme. We've covered off the next common one, the job retention scheme. Again, you guys probably know about all of the other stuff, but just in case, there's universal credit. I'm not going to go through the criteria. We can give it to you afterwards if you need it, but literally go on Google, type in universal credit. Everything is there. There's loads of criteria. So there was one I read last night on social media that an individual is not working. She's got no income, but because she lives with her partner who does earn money, she's not eligible. So it doesn't help them paying their bills. But it is there. No doubt a lot of you have already applied and hopefully been successful. But any questions, give us a shout on that. Bounce back loans. I'll go down in order. So business bounce back loans, if you've not heard about them, they're quite unbelievable, to be honest. They're there. They're backed by the government. They're to support small and medium-sized businesses to borrow between 2,000 and 50,000, but it's capped at 25% of your turnover on your 2019 figures. So if your 2019 figures were £40,000, you would be eligible to claim a loan, not claim, sorry, to borrow a loan of 25%, which is 10,000. The key to remember on that is it's a loan. It's a loan. It's still a loan, and it's a loan. It's not free money. It's a loan. If you don't get it, it's a loan. But if it helps, the interest is unbelievable. You pay nothing for the first 12 months, and then the following 5 months, it's 2.5% interest. So
originally the business interruption loan, sorry, Alex, wasn't it initially? But that was much harder to. That was the first sort of loan that they had launched. But this one, yeah.
I think this is more flexible, and I think bounce back is probably quite key. And I think this, I've done a couple of clients with this where we've helped because they need a loan for various reasons, and they've borrowed £30,000. They applied on a Tuesday at midday, and on the Wednesday at midday they had £30,000 sat in their bank account. Again, it's a loan; he's got to repay it, but the interest was £2,000 over 6 years, so it's ludicrously cheap. But again, I'm not condoning borrowing money. It's a loan, but if it works, then by all means proceed. If you need help, get in touch. We'll give you a shout. Mortgage holidays. Anyone who's got a mortgage, the same for renters' rights. Really, we can cover both of those off. The rules for landlords have changed. They're not going to bin you out. They have to give you different notice, etc., etc., etc. And yeah, so that should be fine. If you've got a generous landlord, then hopefully they might have given you a bit of a break on your rent. Why would they do that? Well, if they're claiming a mortgage holiday and they're not paying their mortgage, then you'd hope landlords would reciprocate that, really. There are other grants available. So if you've got a business premises, so that's quite common. If we've had clients that own a shop, for instance, for whatever reason, they get a grant. So you can get up to 25,000. Or my sister actually owns her own beauty studio salon. I'm not sure what the posh word she calls it, but it's very cool. It's very good. And because she's obviously most definitely had to close because she can't do the lip fillers and things that she does, she's been entitled to a grant, not 25,000, but she's got a grant to support her through that. So anyone that's got a business premises, that applies, but not your house. That wouldn't count. More exciting things, I suppose, is a July payment on account. I don't know whether exciting is the right word, actually. It's beneficial because it's saying that you don't have to pay your July payment on account in July. However, you've still got to pay it. They're not giving you free money. You've still got to pay it, but you haven't got to pay it in July. So I think for me, there's two things there. One is if you get your tax return in, you might be able to reduce that July payment on account anyway. And if you can't reduce it, you might get a refund back. Or even if you don't get that, at least you can work out what January's tax position is going to be. I'm well aware we've got clients and friends that are really going to struggle to pay their tax in January unless things reopen. I did a poll the other day on Twitter to say, when do people think theatres are going to open? And I think generally everyone was saying January, February, March next year. Again, nobody knows. It would seem sensible, but it is going to make people paying their January payment on account, their January tax bill, including their July payment on account, quite difficult. But at least they're not going to be knocking your door in July time. You can reduce them anyway. You should only reduce them if your income is going to be lower, but you can look at reducing them. We've done that for a few clients because we know their income is going to be less. The only other thing you would look at on that actually is, because we're now in the 2020-2021 tax year, we know that the income is going to be lower. So you could definitely look at reducing the payments on account. Basically, you could roughly work out what they may be. So that's very good. And for any of those that are VAT registered, again, similar to the payment on account, you still need to pay it. We've got a lot of agents that are clients or production, whatever it may be, different clients that have VAT liabilities to pay because it's on income from, say, January, February time, January, February, March, or December, January, February. those VAT liabilities do not need to be paid. They are deferred until March 2021, but you've still got to pay them. They're not going away anywhere, unfortunately. So let's move on to that. So to be honest, guys, I've skipped through most of that. How long have we took? 35 minutes probably, because we were a couple of minutes late. Today isn't a pitch for business, genuinely, and it genuinely isn't. I'm really chuffed Rosie's asked us to be involved, really proud. We've done a lot of these for a lot of people at the moment. Again, it's really weird. Hopefully it's going okay at the moment, because I just can't see anybody. It's quite surreal.
Hi, Alex.
Hello.
Hello, great job. That was so good. Thank you so much. My laptop's actually about to run out. 1 second.
Did you have a quick nap, Rosie, or did you stay awake all the way through?
Well, I think it's probably for the first time for some people when they've actually, really been sort of taking notice of what's happening in terms of tax law. I'm just going to take your screen out of the stream, if that's okay.
No problem.
Just because all of this has affected everybody individually in such sort of different ways. So I think probably people are more up on kind of tax information at the moment than they probably have been. I know certainly in the past I've literally sort of been aware of my accounts, but generally have kind of handed things over to my accountant, whereas now I've kind of been reading up on all the government information and what we are and are not eligible for. There are a few questions in, so guys, this is great. Thank you. Keep asking questions. Patricia says, would actors be eligible for bounce back loans if needed? Thank you so much for doing this, Alex and Natalie.
Bless you. You're very welcome, Patricia. Thank you for the question. The answer is yes. So to begin with, we thought no. We thought that it was just limited companies that were a business. But as far as where they were at the moment, yes, business bounce back loans, you can apply. To apply, basically, you go to your online banking. That is it. You will need your turnover figure for the 2019 accounting year. If you haven't got it, speak to your accountant. Or if you've got it somewhere, Patricia, then you can use that. But yeah, you can apply. So go online. I was going to say a name of a bank then. Can I say a name of a bank? Rosie, am I allowed to say a name of a bank?
Sure, why not? They're not sponsored.
So Lloyds Bank, when they're watching it later, have been absolutely unbelievably amazing. Unbelievable. Again, that client that I just spoke about, 12 o'clock on the Tuesday, applied for £30,000. He's a limited company. He's got obviously a sufficient income. Within 24 hours, he had £30,000 sat in his bank account. Some of the banks have not been as efficient, and some of them have taken a couple of weeks. But have a look. Go onto your bank. There will be a huge COVID-19 section on there. It will say bounce back loans. And if you get stuck, give us a shout and we'll help you, no problem.
Brilliant. Thank you for that. Am I right in thinking as well that actually the government has kind of underwritten these loans?
Yes. Yeah. It's the only time that's difficult, Rosie, is it's a very good question. You should have typed that in, Rosie. For limited companies, and I have to be careful how I word this, for limited companies, there is no personal guarantee to that loan. So if that limited company were to be insolvent and liquidate in a couple of years, that loan disappears. So if I were to be a pessimistic accountant, I would suggest that a lot of clients a lot of people applying for these loans may not be repaying them with time to come. However, from a self-employed point of view, because it's in your own personal name, you will still need to repay it. So I think the government backing on that is different for a self-employed individual, because you haven't got that, the limited liability veil that goes around Pearson Casting Limited, for instance. It's not there with a self-employed individual.
Good. Patricia says thank you.
You're very welcome, Patricia.
Daisy Hill says, my business is not eligible for any grants I know of. We are yet to have a tax year and I don't have a business premises. Is there anything you can suggest?
It's really hard, Rosie, and actually this is a typical example, and it's, without sounding like Martin Lewis or without sounding like a boring accountant, and without swearing, that is the worst position to be in. That's it. So they're not eligible for any grants because they've not got a business premises, so that takes that out of it. They've not done a tax year yet, so I'm not sure whether Days is a limited company or self-employed. Either way, it doesn't make a huge difference. So they've not done a tax return yet. So they haven't submitted a 2020 tax return yet, I'm assuming. There are no grants available, and that's where you just go to Universal Credit and apply for Universal Credit. That's it, unfortunately. And it's, my caveat is, don't shoot the messenger, please. I've said to clients, please don't shoot us. We're trying to help. That's just the cutoff. They've put the cutoff in, and a lot of people have fell through those gaps, unfortunately.
Yeah, I think it's like 3 million people that are sort of excluded from any support scheme, and it is rubbish. It's hard for those people that do fall through the cracks.
So I'm sorry, Daisy, I can't suggest anything. If I'm again not touting for business, Rosie, I'm definitely not. But if you want to get in touch with Rosie or get in touch with us, we'll have a separate chat with you privately. That's fine, no problem, because it's a really rubbish position to be in for you.
Just actually, while we're talking around universal credit, I think a lot of people, as you say, have fallen through the cracks on this, have applied and maybe got universal credit. How does that work for them coming out of it? So if they receive SACE, for example, do they declare that? Is that an income source that they then would take off the universal credit? I know that they kind of reduce it by, I think it's 63p for every pound you earn. But obviously with self-employment, that could work slightly differently to someone who's on PAYE, who maybe gets at the end of each week or month. So how will that work for people coming out of using universal credit?
Yeah, good question. To be honest, we're not universal credit experts, or I'm definitely not, and Natalie isn't. So it's really difficult to specialise in. You know, we do tax, that's it, and other tax.
We've never really had to get involved with for our clients previously, so it's a new thing to all of us.
But I think, yes, you have to report the grant that you received to Universal Credit, and yes, it will potentially affect that grant. So apply. It's better to have it, the grant, if you can get it, and if it, it's not going to, or it shouldn't wipe out the universal credit, but it might reduce it slightly. However, the grant should far outweigh that universal credit. So yes, you need to report that grant to universal credit, Rosie. Great,
it's good to know. I think a lot of people have found themselves now using universal credit where they never have before, and I think it's a new area for everyone. And I know that the Chancellor changed some of the ways that works and who can apply and all that kind of stuff. I think it's very new for everybody, and then there are a lot of particularly performers, as you say, who've fallen through the cracks, who are now using a system that they really don't know much about.
Sorry to interrupt. They've paid out. They've paid out earlier, and they have flexed some of the rules, which is better. And again, trying to keep on top of all of those changes, it's absolutely mind blowing, Rosie. You're trying to. I think my wife thinks that I don't like her anymore because I've not spoken to her much on the evenings. Get home, put the kids to bed, and then get back to it. So they have made it more flexible. They are paying out earlier, but it's still, it's still not a great help, but it's something, I think, isn't it?
Something, yeah. Rachel says, as someone who has just returned to the UK in the middle of May and isn't eligible for the SACE, what would you suggest, as a means of income, as majority of my work in the UK is self-employed?
Hi, Rachel. Thank you for asking. That's the first time as well, Rosie, I've heard it called the SACE. I quite like that.
I heard that from someone on the telly. I can't remember who it was. It wasn't Rishi Sunak. It was someone else.
That's pretty cool. Well, I keep sort of stuttering the SEIS. Is it? I keep stuttering it through, so that's really good. Rachel, back to your question. So you've just returned to the UK in the middle of May. You're not eligible for the SACE. I think that's a Spanish word, that is actually somewhere. What would you suggest as a means of income, as a majority of your work in the UK self-employed? So normally you would be expected to be eligible for the grant. If you're not, for whatever reason, because you've not done a UK tax return, then there is nothing really that I could suggest, I suppose, apart from what's everybody else doing. I think they're getting jobs in Tesco's or I keep mentioning Tesco's, Rosie, but I know there was a hashtag on Twitter, wasn't there? Everyone was working in Tesco's and having their comments. So I think really, Rachel, it's universal credit potentially, but actually for future self-employed income or any other income, it's universal credit or employment elsewhere, I'm afraid.
Yeah, I think it's a very hard time at the moment. There aren't necessarily the availability of jobs. I think a lot of people went out very early on to get, PAYE jobs or 0 hours, whatever it was, very, very fast. And I think now there's probably less availability for work because the hospitality sector's closed as well at the moment. I know that's looking to reopen, but that certainly has been a fallback for a lot of people in the creative arts to kind of go and work in pubs and bars and restaurants and that kind of thing. Without that, I know it's very, very difficult, Rachel. It's tricky. It's a tricky time.
Horrible.
Amy says, just a general tax return question, if that's okay. I sold my car last September. How do I declare this on my tax return? I've heard the term fixed asset, but what does this mean? Thank you. Good question.
I quite like a general question, and we could cover more general ones off in future, Rosie. I think the future ones we'll just do general tax help is the the long story short is when you bought the car, if you included it in your accounts back then and claimed capital allowances on it, then I've got to explain capital allowances, I suppose, haven't I? Capital allowances are if you buy a car for £10,000, you are not allowed to claim all £10,000 unless it's electric or a van. You get something called a writing down allowance, which is based on capital allowances. Really boring stuff, but basically you would get an allowance of either 8% of the cost or 18% of the cost, and it comes off each year going forward. So very boring. So if you included it and did claim that 8% for however many years you've claimed it for, then you also need to include the sale of that car in the capital allowances section. If you've done your own tax return, I'd be surprised if you have included it. So if you have, then include the value that you've sold it for in the capital in the disposal section. If you haven't, then you probably claim mileage instead, and you wouldn't need to include it. But again, drop us an email if you want some general help on that. Rosie, generally just on that, I suppose let's touch on it a little bit because we've flew through our other questions. People generally either include mileage, that's it, and you claim 45 pence per mile for the first 10,000 and then 25 pence thereafter, or you claim the capital allowances on the car plus the insurance, the tax, the repairs, the servicing, etc., but you should only obviously claim, really boring, Rosie, the business proportion. That's it, I think, for that, really. Yeah.
Great. There aren't any other questions for now, guys. If you have anything that's general tax questions at all, these guys are here. So, pop them on and, they'll answer any of your questions. Meanwhile, I know you've been talking about taxes for, obviously the 1920 taxes are due back next January. So you mentioned this very briefly, but I just want to...
Yep.
Oh no, Rosie, you've disappeared.
I'm not the only one.
No, IT issues everywhere.
We did have that question, didn't we, Alex, from Emily come through on the emails?
Yes, Emily, about what expenses we can claim. So Emily, hopefully you're watching. Drop us a comment if you are, Emily, so we know that you're listening, or you might be planning that later.
Shall I read out Emily's question?
Yeah, go for it.
So, I would love to know in your chat, what can you claim as expenses when doing your tax, i.e. acting classes, do they count along with headshots, showreel costs? I've heard you can, but be really interested to know regarding these classes. I'm still new to this, so a list of these things would be amazing.
Okay, perfect. I'll answer that one. Thank you, Emily. Again, we'll touch on these in future talks, I think, and we can run through it in detail. I think if anyone that's listening wants anything specific or any topics specifically spoken about, we'll cover that. Oh, hi, Rosie, you're back.
Hi, it's just technical issues left, right and centre today.
We carried on. It's all under control. We're in the middle of answering Emily's question.
We've got an online one that we
don't even need me anyway.
No, go and get a cup of tea, Rosie. You'll be fine. No, I'm kidding. So Emily's asked a question. She emailed us yesterday, I think, or the day before, about what expenses you can claim. So again, we'll cover this in future episodes, future videos. But in brief, I think, to sum it up quickly, don't believe everything you read on the internet. Don't believe everything your friend tells you. And that's point one and point two. Point three is anything that you think is to do with your business generally can be. So I won't go into the boring elements now about it has to be wholly and exclusively for your business. And there's also words such as a duality of purpose. So a few costs that you can claim, and we've got a list on one of our blogs on our website, actually, I think. Yeah. We can send something out to you. So things, Emily, such as agent fees, yeah, most definitely, they can be claimed. Travel costs, yeah, most definitely, they can be claimed. Accommodation costs, so you might be on tour. Oh, Emily's watching, she's just sent us a message. So accommodation costs, postage, stationery, not that postage really exists that much anymore, but yes, you might have bought a new Mac or a microphone, or, you know, the most common thing the last couple of years, Rosie and Emily, has been like people buying GoPros. Obviously, they're 100% for work. They don't take them on holidays with them and use them. It's all for work. But stuff like that. Any subscriptions. So if you're a member of, I don't know, the Actors Guild, for instance, or you pay to go and do sessions, singing lessons, acting lessons, etc., etc. Website costs, showreel costs. So there's tons. There's lots that can be claimed. We'll touch on more in depth in future ones. You just need to be careful. I've seen so many horror stories that people just include all of their weekly shopping. Rosie, you've got your own business, so you know how strict things are, but how you can also include certain things. Take a typical example would be mobile phone costs. Generally, everybody has a mobile phone. Let's say it costs £30 a month, £40 a month. You wouldn't necessarily include the whole £40 per month. You should only include the business proportion. That's it. I think from our point of view, the private adjustment, without giving too many tips away, is probably, the business proportion is probably greater nowadays, because any phone calls that you generally make or text messages, they're generally WhatsApp, so it's free, or it's iMessage, so it's free. So we would always say the business proportion is quite high, but hopefully, Emily, that covers most of the expenses. And again, watch future episodes of this amazing thing that Rosie and James have created, and we'll cover it off more in future.
Brilliant. Elena says, at what point in an actor's career would you suggest getting an accountant? Elena, you're asking accountants, so
no,
I know what the answer is going to be.
That's a really good question, and hopefully anyone that is a client of ours will know that I always answer that very transparently and say, actually, you don't need to have an accountant really at any time. However, my caveat would probably be that when, I don't know, is it when you start paying tax? For me, it comes down to a couple of things, Rosie and Elena. It's one, the hassle factor. You know, it's a hassle doing your own tax return, isn't it? The amount of people that do it on the 31st of January. Oh my God. So that's just a hassle. And we've seen so many horror stories on the 31st of January. So that's point one, the hassle. If you've got the time and the brain power to do it, then do it yourself. That's fine. Accuracy, that's a big thing. I think we've seen some real horror stories of people getting.
Now that the grants are coming out and stuff, it's people that have done their own. There is some horror stories that we have definitely come across now, where things have gone in the wrong boxes, and employment's been showed as self-employed income has been showed as employed income, and incorrectly.
There is horror stories. However, I would say if you're only earning, let's say, £5,000 a year and that's it, do you really need an accountant? You don't have to have one, but if it makes your life easier for what the small cost that some accountants charge, it's probably worth it. What I would strongly suggest is when it gets to people getting mortgages, we see that a lot now, and accountants help out a huge amount with that. And also, I think when you are tipping over probably £15,000 profit-ish, when you're starting to pay payments on accounts, when it just gets a bit mind-blowing, I think, again, for the cost of what it is, it's cheaper than a mobile phone cost, monthly subscription type thing. It's just probably just worth it. But answer the question, Alex, I would say when you start paying tax would be a good time. If you're into the high rate level of tax, which we've seen clients or clients come to us, I would say 100% you need an accountant. 100%. Do not do it yourself if you're into high rate tax, because if you miss something out that costs £100, that could save you £42 in tax, basically, and you might miss it. So to sum up the question, Elena, you don't need an accountant really, but if you're paying tax or getting close to it, or you don't want the hassle, or you can't deal with the stress, if you have a breakdown on the 12th of January every year that a lot of people do, or you're paying loads of tax anyway, or you're earning high rate, or getting a mortgage, then get an amazing accountant. Like us, actually, Rosie, potentially.
Like you. It's like a amazing. So Emily's come back and just sort of as a follow-up said, so a company that runs acting classes you can claim as have all invoices, etc. And then she says you guys are super.
Yeah, so acting classes, singing lessons, dance lessons, etc. I think workshops is probably quite a good example, or those type lessons. Yeah, that's it. Perfect. Yeah. Great.
Everyone just saying thank you. This has been so helpful. People that you've answered questions for just saying thank you, thank you, thank you. I think people have just found this really helpful. And I think as we continue to do these sessions, as we cover different topics, I think things will come to light for people, maybe in ways they haven't thought about in terms of their tax. Rachel just come back in and said, can I pop over an email regarding my tax return as it includes majority foreign income and foreign tax?
Yeah, 100%. Yes, Rachel, 100%, no problem. That I've missed that off in answer to Elena's question, because the clients that we see that work on cruise ships nowadays, Rosie, has risen drastically. And what happens is, and if anyone's listening that's been working on a cruise ship, when you go and work there, they say, oh, you don't pay tax on this income, you don't pay tax on this, don't worry, you'll be fine. And then when it comes to doing the tax return, that individual would realise that they were only out of the country for 4 months and not 9 months or whatever it is. They do have to pay tax. They don't qualify for the seafarers deduction.
Really strict criteria, seafarers relief. So that's what's worth.
Yes, Rachel, you definitely can. Send us an email. And Elena, to add on to your previous question, if you're working on cruise ships, I think getting an accountant is really, really helpful for that as well. Definitely.
I know as well the criteria changed for how many days you had to be out of the country. So when I started doing ships, it was a lot fewer. And then they kind of bumped that up. And then also, I know I have a lot of friends who worked on ships who, because they haven't been paying tax over the last 3 years, or certainly they've been paying very small amounts of tax, have then not qualified for any government help. So there's lots of those people who took the relief because it was there. They weren't kind of dodging anything. They just said, I have 14 months sometimes at a time. And then obviously that means that they've not received any government support. Very difficult.
I think the only way to try and make that feel a little bit easier, and again, I've certainly not made the rules, is that those people that have qualified for the seafarers deduction didn't necessarily pay tax back in that period. I did have one friend, actually not a client, fortunately, contacted me, as they do in these situations, because they need an accountant for free, because he's a mate, remember. He said, I can't believe I'm not getting this grant. I said, well, what do you mean, Rosie, for instance? So I've made a loss for the last couple of 3 years. I've not made any profit, but I should be getting £7,500. And we had a bit of a laugh about it and stuff. I said, well, not really, Rosie. It's not Rosie, but using you as your name. I said, because you've made a loss for the last 3 years, so you wouldn't be eligible for a grant. I actually said to him in the end, you're probably lucky because you're not going to lose any more money for the next 3 months.
Right.
But you're also not going to get a grant to go with it. So yeah, that was an interesting one.
Difficult. It's very difficult. Yeah. Rachel's come and said, amazing. Thank you. That's me, a seafarer. This has been amazingly helpful. Thank you. Thank you. Thank you.
You're very welcome, Rachel. Very welcome.
That. Well, I think if that's all the questions for this morning, guys, thank you so much for coming on and giving your time and your expertise. We will have you back every couple of weeks, and then so perhaps next time, you said we'll talk a little bit more about general tax returns and self-employment tax. Is that right? Yeah, we can. Ultimately, Rosie, we'll talk about what you want us to talk about. The most common one is generally schools that are, in their last year, they're going out to the big bad world of tax. We go in and give them a tax talk and just talk them through from the beginning to the end. When do you register as self-employed? What about national insurance? So we could probably do one of those, or if anyone's got any specific topics they want spoken about, either drop us an email or hashtag Rosie on Twitter, or email Rosie, and we'll put that into our slots. No problem at all. Definitely. Well, let's start with a general one, and then there's more questions. As I said, I think this will start to raise questions that people have. I think, as I said earlier, most of us have it's been something we've done at the end of the year, and it's either given it to an accountant, but which, by the way, you're still responsible for your own taxes, even if an accountant does it. So you need to know what's happening, or it's just been something we've done kind of at the end of the year. But I think potentially this whole situation has made everyone a little bit more aware of what this means and the responsibility that we have for for our own tax returns and making sure that everything's done correctly. And as you say, obviously people now may be missing out on support because they haven't filled in tax returns correctly. Obviously it's really sad.
It is.
Just another one from Leanne. She just says, thank you so much. This has been brilliant. Good vibes. Good vibes. Yeah, amazing. Good guys, vibes, thank you so much. I'm going to take you out of the stream, but stay in the backstage studio because I just want to say goodbye and thank you at the end of this. I'm going to take you out of the live stream. Thank you so much again. You're very welcome. Thank you. Guys, I hope you found that really helpful. Alex and Natalie are just such lovely people, and their advice is absolutely invaluable. Actually, I'm going to bring Alex back in very quickly. Alex, I'm so sorry. Just talk for 2 minutes about if people don't have an accountant and they would like some support at this time, or are thinking about maybe using somebody to help with their 1920 tax return, where can they find you? Tell us a little bit more about what you're offering and how to get in touch. Okay, yeah, perfect. Well, first of all, it's lucky I wasn't doing anything then, wasn't it? Because you quickly shut me back in. Gone to the loo or something. Oh my word, I'd have disappeared. There's no one here. Yeah, no, thank you. Yeah, just get in touch. Really, again, it's not a plea for work today. We've come in to help, but if anyone needs any help at all, you can find us on Twitter. We're quite cool on Twitter. Hopefully, Rosie, I think you find that we give away a few free tax returns now and again, and we've tried to give out tons of advice. Yeah. Website, Rosie will tag us in those details. But I think without boring everyone too much, Rosie, we love the business that we're in. At the moment, it's really hard because I actually get quite involved with clients, and your emotions do get quite high with the people that are losing out. Genuinely, I can't get that across enough. But we've got X thousand clients. We've got a great team. We've got anybody and everybody that you can think of in the entertainment world, from, I don't want to miss anybody out, but from casting directors to actors to agents to models to production companies to comedians. They're quite cool. Everyone's cool, sorry. West End performers, obviously, soap stars, anything and everything really. So get in touch by all means. If anyone wants just a free quick question that's been involved in today, no problem at all. I think we're reasonably priced, and I think you get a great service, and that's probably it, Rosie. I'm not going to do any big pictures. We try and keep it simple. We're normal people, so give us a shout, no problem. Amazing. Alex, thank you so much. You're welcome. Thank you, guys. Good, so didn't forget that. I know that Alex and Natalie can still see this. So Miriam says, thank you so much, not boring at all, very useful, thanks for offering this chat. Rachel, thank you so much, Natalie and Alex, for all your useful advice and knowledge. We really appreciate your time this morning. And then Freddie's Corner, thank you, learnt a lot today. So guys, we are going to be doing this as a regular session. So if you do have questions or concerns, or as the situation changes with the government, then we can be talking about those. So you can always be emailing Alex and Natalie at the email address, which is on the timed class timetable, and we'll also pop it underneath this YouTube video as well. Yeah, so keep an eye on that and keep checking back in. Coming up next at 12 o'clock, we have Introduction to TAP with Simon Adkins. We've called it an Introduction to TAP, but this is very much aimed at performers who have had some kind of training and are at a good level of fitness. So if you, let's say, did some TAP back in drama school 10 years ago and you want to kind of get back into it, this is your opportunity to do that. This is not an advanced class, but certainly for people who have some understanding of dance. So we will see you back at 12 o'clock. Thank you so much, and we will see you very soon. Thanks.